Another crazy week in the market. Time to go through some charts, figure out what happened this week, what potentially could happen going into next week. As always, what I do after this is I run all of the data and the algorithm for StatSearch Pro members. So you guys will get that later in the weekend, generally on Sundays. And what we do is have systems, and they tell us exactly what we should be looking at and what prices we should be looking at, when we're wrong to move on, when to get out, when we're right. All of that is sorted. So I think the best part about being a systematic trader is during this sell-off, although it's not the most fun time to trade, it doesn't bother me because I know I have 30 years of back-tested data. That is all over on stats@trading.com. You can look at every single month going back, last 25 to 30 years, depending on the strategy, and see what would happen. What happened in 2008? What happened in 2000 during the dot-com bubble? So I know if I just stick to my systems that eventually will come out the other side and I will be positioned pretty well. It's really cool to see the trend following strategies go to cash at pretty much the right time. So they went to cash and now we're doing more scalping, but in and out in about a week time frame, right? So we're buying these things, they pull back, we're selling them out the next week. We're spending most of our time in cash, just waiting out this market until the system says, okay, it's time to start taking more trend following and longer term trades again. So again, it's been super cool to see. If you are interested in making sure that you can trade with an edge like that and calm down with the emotions, come on over to stats@trading.com. So without further ado, we're going to get in, and as always, we got to start with Bitcoin. Someone asked why I start with Bitcoin, and I just think this is the perfect risk-on asset. Now, for Bitcoin maximalists, put your earmuffs on. It didn't help us during inflation. It didn't help us during any of the bear markets, so it is not a hedge against either of those. What it is a risk asset, and it tells us whether people are feeling more risk on or risk off. So the fact that we had a nice green day today, a nice bounce off the lows, shows me that at least for a little bit, we're getting this kind of risk on activity. You could also just look at Farcoin, I guess, at this point and just see, yeah, a nice little bounce here off the lows on this security. So, it's one of those, the way I look at it is that, are you going to be, if you're worried about your job, are you buying more Farcoin or are you, maybe buying food or something like that? So that's why I always look at Bitcoin, and it does look pretty good. And along with that, WGMI is another one to watch. And this is the Bitcoin miners. Did very well today and at a very interesting level right here that we got to watch. So the dollar actually chilled out, and I think that's what kind of helped for the strength in the overall market. If the dollar is moving erratically either way, it becomes really hard for large businesses to plan the next couple quarters. If the dollar is moving a couple percent a day, that gets hard for equities and hard for businesses. So as the dollar starts to calm down, I think that is overall good for equities. And generally speaking, we want to see more of that if we want to be bullish equities. So the S&P 500, the Qs, IWM, all of that had got a nice little bounce today. This is actually technically called a kicker pattern, little candlestick analysis lesson for you guys. But when you have a down day that closes at lows, then you have a gap up the next day and a big push and that closed near highs, that's generally considered a kicker pattern. And, you saw one here that did nothing. So these things are not, they're not bulletproof, of course, but it just shows that we're getting some change in sentiment, some push right here. And all we needed was one day without any kind of tariff war, tariff tweet to have a little bit of a lift. So that was really good. The RSP, right, still, although overall bad, I'm anchoring everything to this Jan low. If we go back to the SPY and we look at that Jan low, you can see how far below we are. But the RSP, which is the equal weighted S&P 500, so not cap weighted, so it doesn't really care as much about your NVIDIAs and your Teslas and all of that, that's doing a little better. So just showing that under the hood, things aren't as bad as they seem if you look at the SPY, but they're still not great. Right? We're still down quite a bit on all of those names. So nice little push up there. If it can reclaim this low, it just did by a couple ticks, but I mean like a good push and a hold. That to me is really bullish on the overall stock. IWM is at a massive support zone. You can see way back here, support right here, support back in August. That was the yen unwind, the yen carry unwind. A nice little pop there as well. So interesting zone there for IWM. If we take a look at what was next? BRK. Oh, I think I have it over here. I have notes over there. That's why I keep looking at. So this is Burke versus ARK. So Berkshire Hathaway versus ARKK, you can see a nice steady and slow push higher. And that just tells you overall what kind of instruments people are looking for, right? They're not looking for, uh, you know, they're not looking for risky stuff, right? We all know the stuff that Kathy buys. Kathy buys things that don't make money right now, and the hope is they make money in the future. Warren Buffett looks for stuff that potentially is going to make money right now, right? Stuff that I can, right, drop it on my foot and it hurts, things that make money right now in this particular moment. That's what's doing well. It's not the stuff that Kathy's buying. So this is a chart that I always like to look at. This is, from the 18th on. You can see this massive push higher. You can zoom out and get kind of a good view of when things are risk on, risk off. I think this is a good chart for that, right? When things are pushing, this was right after the election. Everybody was risk on. No one really cared about what Buffett was doing. Everyone wanted those Kathy stocks. And then a complete reversal from that, just showing Uncle Warren, he's still king. Now, a couple of other names in the commodity space, URA. So URA is super interesting, where I've been very interested if the AI play is going to kick off. Uranium is going to be one of the ways that we're going to power it. So this has kind of been a proxy a little bit for the AI play as a whole. You can see this $23 massive level going back a long time. We settled into that this week. Didn't sell off nearly as much as the rest of the market and dug in, just showing that uranium may still be on the market. Now, XLF financials. This is the anchored VWAP from that August low, and we have pulled into that and then bounced off. This just shows the average price of the average market participant from that yen carry unwind. And you can see how this acted as support right here, and then acted as support right back here again, and now we are acting as support in this zone. So if that continues, that just shows us that, yep, there's people are looking for prices to buy on this pullback. Doesn't necessarily mean things are going to move higher or anything like that. Just saying on this pullback, there are some people out there that are taking advantage and buying, and that's what we want to see. What you don't want to see is everybody just running for the door and just exiting everything entirely. You want to see when we get down to interesting levels or levels you think that things would work at, that there's some buying that comes in there. It doesn't have to be huge, just some buying that happens in these zones. That's great, right? Financials is obviously very important. GDX, gold miners, gold has obviously been on fire. Gold miners getting up to a pretty key level right here at 44, 45. So if we can get through that, that's going to be interesting from the gold mining point of view, saying, hey, we're finally able to probably make more money based off these more inflated gold prices. And then Solana, SOL-USD. So Solana, massive level, undercut that level just a little bit and then rallied back above. So this 125-ish on Solana has been super important, and I think will continue to be so. If we lose it, that's going to be a huge sign. If we can hold it, that's going to be an even bigger sign. So I'm watching this level 100% on Solana. Now, what we're doing, right? So I mentioned the trend following strategies have been pretty much done for StatsEdge Pro. But what we've been doing and what I've been talking to you guys a little bit more on the Monday videos. So if you're not getting those, make sure you are going to statsedgetrading.com. If you sign up for the free email list there, I always email out every time I do a video. So you don't need to be subscribed or followed wherever you are. You'll get that email directly, and never more than an email a day there. So what we have on this pullback here is names that we're buying. And that's just what's happening for StatsEdge Pro. This is the one I talked about Monday, this FLGT. We have multiple strategies. And the reason we run multiple strategies at StatsEdge Pro is because sometimes there's strategies that do amazing. In ripping markets, trend following just kills it. You just buy strong names, you hold them, you make a whole bunch of money. In down markets and markets like this, a lot of people think, why don't you just short stuff? Well, you're gonna see, I think, some point in the next few weeks what happens when you do that. You have massive rips in these more bearish markets. When it pops, it will pop 5-6%. Anything you're short will be up 10-20%, and that will really hurt. So you can't just trend follow as easy from the downside. So what we do is we try to time bounces, and we have strategies to do that. And that's what a lot of these have been doing. So anytime you see this purple line, that was the entry price that the system alerted all of our users. So FLGT, although not, a banger trade, we got it a little bit below 17, and it's just kind of been hanging out at that zone, right? INTA. We can do it on this chart and then go here because there's the line. It's weird that it matters which of these that I'm on. Boop, remove that. So INTA did not get that print, bought it a little bit higher, but a good little trade there. These are the scalps that we're taking to try to make sure that we can do okay, right? BRK, Baker Hughes came down to that level. I didn't snag it at that level. I got a little bit on the way up, but a decent little trade there. And of course, they all won't work. So I think JP Morgan, we're still a little bit underwater on. Yeah, I bought it not at that price. I actually got this one a little bit lower, so I'm up a bit, but the algorithm's down a bit. You can just see what we're doing. These things are extended, and it's not just catching a falling knife for the sake of catching a falling knife. It is, I have back tested some strategies, and they say, hey, when you get this far extended from these key indicators, you can take a shot. You're going to be right roughly 58% of the time. You're going to make as much when you're right as you lose when you're wrong. And if you just repeat that over and over again for a long period of time, it ends up being a pretty great strategy. So that's the kind of thing that we're doing. And that's the kind of thing that I think you guys should be looking at as well. It's not the time to be buying things as they're ripping and trying to catch the thing as it's making new highs or something like that. I don't think that's the move. I think the move is more what we're doing here, and in this kind of idea of look for things to come down and then look for them to potentially bounce a little bit later, right? Just buy the dip, sell the rip, stay light on your feet, trade frequently, or the complete other way is do what our trend following system has done and completely shut off, and it will wake back up when the markets seem a little bit more obvious, right? One of those two. You either get really, really active or you just go golfing. Those are the two ways that I look at trading these markets. So if you're interested in getting a little bit more active, or you're going to go golfing and then you want to know when the system turns back on for trend following and for rotational strategies and things like that, come on over to statsedgetrading.com and give us a shot.